Hello everyone and welcome back to my channel. As of every week, we will jump into the fundamental, sentiment and technical analysis of different currency pairs to explore our opportunities during the next week. Also, we will pass through some trade opportunities that I took during previous week. I did not mention it during the previous week's video because it was very hard, the sentiment was very powerful, and as we will see, there was huge losses. I could have managed my losses, but I lost a lot. But also I'm still in a winning trade, and hopefully this winning trade will recoup everything that I lost. Even if it didn't, it's totally normal. I'm still up on my year, and hopefully we will stay like this if we stay disciplined and follow the strategy. Also, I added something called qualitative analysis because of sentiment and news and powerful news affecting the markets. I added this qualitative analysis. One example is taking the news 24/7 news from Financial Juice and adding it to this area and to analyze qualitatively how these news will affect the markets. An example of it will be 7 hours ago, Bank of Japan to maintain rates in March meetings. This will affect the Forex market because this is a rumor, data did not come out yet. So this rumor will affect the sentiment for a different period of time, which will make it harder for me to, if I didn't follow these qualitative analysis, it would be very hard for me to time my entry very well. Why? Because sometimes fundamentals are pushing higher, but sentiment is very strong, which will make a short-term retracement, which will stop me if I enter during the wrong time. We will go into some trade that I took previous week that this happened with me. That's why after the analysis of the losing trade, I added this qualitative analysis. Now, from a fundamental perspective, US dollar is still the strongest, and the Swiss franc and the New Zealand dollar are still the weakest, although data is not supporting the growth of the US dollar because of tariffs. Tariffs are very, very dangerous because during tariffs, inflation will increase, GDP will decrease, and the labor market, there will be a lot of uncertainty. That's why when we go into gold now, we will see how gold is moving higher. Why? Because of uncertainty in the US. This uncertainty will affect its currency, which will make gold go higher. Also, during uncertainty, global uncertainty, the people will move their money into gold. That's why the demand of gold will increase and the prices of gold will increase. Now we will jump into some trades that I took during previous week, and we will start with the losing trades and what did I learn from these losing trades. First trade that I lost was Australian dollar Swiss franc. First of all, when I entered, there was good news for the Australian dollar. Then the second day, data came out negative for the Australian dollar, which made this move to the downside. I got stopped out, and then prices moved to the upside. What happened is that even when data came out positive, right here, we saw immediate move to the downside, and because of my entry at this area, I did not put a safe stop loss, which made me get stopped out. So the idea behind this trade was right, but the lack of discipline and patience made me lose this trade. If I entered, let's say, risking 2 to 3% and lost this trade based on my strategy, it would have been totally normal, but also I would have learned from it. So, what I'm looking at during the next trades is patience, even if prices move a little bit into my direction. I need some type of sentiment confirmation. That's why I entered this financial juice account in order to follow 24/7 market news when I need to enter previous news, previous sentiment, and data that are coming out, news that are coming out, need to support my analysis in order for me to take the trade. This was a losing trade. I lost 6.2%. So the initial risk was 6% with 0.2% commission, but it's very high. Usually I risk 2 to 3%. So this is lack of discipline. It's totally fine with me. I will start managing it very powerfully. Why? Because I'm feeling the losses. And when I was disciplined, I made good amount of profits. Second trade that I took was on AUD and SD. I took 2 trades and I got stopped out on both of them. Right here, Australian dollar, good news. Prices pushed a little bit to the upside, then prices moved to the downside and I got stopped out. Then I tried to enter another time. Why? Because Australian dollar news were coming out good, and fundamentally Australian dollar is much stronger than the New Zealand dollar. But as you can see, data came out good for the New Zealand dollar, which made prices go to the downside, and on both trades I lost around 2%. So it was around my risk tolerance and I'm totally happy with it. Okay, totally happy with it, because there is no way that you don't lose trades, and if you lose around what you are willing to lose, you are on the safe side. So the overall loss was 8.3% loss on my account. Then there is a trade that I am still in. I'm currently up 6%. I'm aiming for 40%. So my initial loss was, my initial risk was around 3 to 3.5%, which is around my risk tolerance. I'm aiming a little bit higher for this moving average, but there is no take profit. What I will do is, based on the hourly time frame, moving average and structure, I will be moving my stop loss. And this is an example of it. My initial stop loss was around this area right here, okay, 0.75, around 0.875. Then when we saw shift in market structure and then another shift of market structure, I move my stop loss. Then there is right here another shift in market structure, but we broke the moving average. That's why I moved my stop loss. Another shift in market structure above moving average, another move of stop loss, and now my stop loss is below the moving average and below the structure. So if we make another structure and we broke to the upside, I will be moving my stop loss based on market structure and the moving average. So there is a small standard deviation of the moving average that I'm willing to risk, and this where is my stop loss would be. Hopefully this trade will play out nicely. How I might anticipate it, during the Monday data. So during Monday, there is the global manufacturing and service PMI of the US dollar. Hopefully, they will come positive, which will push the US dollar to the upside. And by this I mean pushing the US dollar Swiss franc to the upside. These are about trade updates. Now, if we go to the cross currency comparison, data are very close to each other. So 7, 8, 8, 7, 4, just the pound very strong, and 9 for the US dollar, and the New Zealand and Swiss franc are still the weakest from a mix of fundamental and sentiment analysis. But based on purely fundamental, the US dollar is the strongest, New Zealand and Swiss franc are the weakest. From a sentiment perspective, the CAD is very strong, and the pound and the euro, and USD is very weak from a sentiment and data deviation perspective. Also, some things that I'm working on is to incorporate indices trades, not just the S&P, the Nikkei, or indices for the pound, indices for the some companies in different countries. Why? Because they have the same analysis of the economic data. They have the same economic data, but different types of analysis. So during huge sentiment moves will happen very powerfully. Let's go, for example, the S&P 500. If you can see right here, it dropped around 10%. Why this drop? Because of tariffs. The fear of tariffs is very, very logical. Why? Because tariffs is some of boycotting. So tariffs will decrease foreign exports to the country, which will affect the country hugely. So what will happen if tariffs are very, very high? Inflation in the country will increase and the growth rate will decrease. Why? Because there is no more beverages or foods or brands that are coming outside of the US to be bought in the US, and if there is no enough supply in the US to accommodate all consumers' needs, there will be loss in GDP and prices will increase dramatically. This fear of increase in inflation and decrease in GDP affected the market hugely, and also we have the US GDP data coming on Thursday, 2:30 p.m. local time, which will affect hugely the S&P 500, and its forecast is very concerning. If we go to Thursday, GDP, its forecast is 2.3%, very, very low than a previous one, which hugely will affect the markets, not just indices, but also Forex markets. That's why on Thursday is very huge day for me. Hopefully I will trail my stop loss to an area where I'm very comfortable in if data comes out that negative for the GDP. Also, if we go to the gold hit on Friday the 3,000 mark, and this move to the upside is very, very logical. The recent move, not just the whole year move of 24, but also the recent move to the upside. Why? Because uncertainty in the markets will make investors move to a safe haven, not just commodities but also currencies. That's why USD chef is a little bit struggling to move to the upside, and Chef JPY is consolidation. So the Swiss franc is a safe haven currency and the Japanese yen is a safe haven currency, which making this consolidation because of uncertainty. Investors are moving their money out of the risk on assets, whether indices or different currencies that are risk on, like the Australian dollar and the New Zealand dollar. That's why we see this huge pour into the Swiss franc, Japanese yen, and out of the USD, because the uncertainty is coming from the US dollar. Hopefully this was an insightful video for you. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until the next week, stay safe.